Mindcast, the Swiss startup podcast. Episode 15: Raising Funds Online. Presented and produced by Swiss Minds. Supported by the Hightech Zentrum Aargau. Welcome to our newest episode of Mindcast. Today's guest is CEO and co-founder of Investiere, Steffen Wagner. Steffen, maybe you introduce yourself?
Sure. Thanks for having me. Well, I'm a CEO, as you said, a CEO and co-founder of Investiere. Investiere is a Swiss-based online business angel platform that exists since 2010. So far, we have funded about 30 financing rounds for 25 different startups with about 30 million Swiss francs. And and I guess the topic is crowd investing, which is why you invited me.
Yes, exactly. Thank you for being here. Crowd investing is crowd, everything is a buzzword. There is crowdsourcing, crowd financing, crowdfunding, crowd investing. Could you elaborate the context a little bit of crowd everything?
Sure. Well, first of all, there's no scientifically accepted definition for crowdfunding or investing or any of those. So I can only give my personal interpretation of what I think the differences are. Well, crowdfunding basically describes the idea to use the internet and social networks online to fund projects, ideas, companies, anything through or primarily through the internet, addressing a wider range of people than what was possible before. Crowd investing is one of, I think, 4 or 5 different types of crowdfunding. There's also crowd lending, crowd rewards or donation, and supporting. But I can mainly speak for crowd investing, as this is where I'm home and what we have been doing since 2010. Crowd investing, perhaps also a definition there, is, from my point of view, as I said, the idea of leveraging the internet and social media to allow the investment into startup companies, mainly equity-based. Otherwise, it would be lending. Thus being able to address a wider, let's say, range of business angels as with a traditional, let's say, business angel or business angel club approach.
Okay, so crowd investing, actually, I give money and I get equity back, not like other platforms where you get a perk as a gadget. Maybe sometimes if it gets produced, you actually get equity stake in the company itself.
Exactly, at least that's how we do it. There's, of course, if you look internationally, there's a number of platforms, especially in Germany, that work with mezzanine type of instruments that are sometimes actually closer to lending, so giving a credit to the company than equity. But the basic idea is to give investors an upside regarding the potential success of the startup company that you invest in. So if it works well, you get a higher return, and that's usually an equity type of mechanism.
Are there currently in Switzerland any restrictions on the regulatory view in order to be able to do this? Or can everybody invest like 50 Swiss francs in a company and hope to get 1,000 back?
There is so far no dedicated regulation in Switzerland for the crowd investing space. Which is surprising in a way, as other legislations such as the UK and the US, of course, but also recently Germany, have come up with a dedicated regulatory scheme. It is not surprising in a sense that Switzerland is traditionally looking what works well or works not so well abroad before adopting any new financial regulations, which I think is also a smart approach. Consequently, you could say that the crowd investing platforms need to operate within the current legislative framework with respect to the collective investment scheme and all the other laws that are already existing. And concerning your questions on ticket sizes, can anyone invest basically or not? We as Investiere have chosen, just to be on the safe side, but also for strategic reasons, to address qualified investors only anyway. So it doesn't make a big difference for us if even, it would not make a difference, let's say, to us, even in case they would impose higher regulations on who is eligible for such investments.
Mm-hmm. So a qualified investor is actually an investor which is known or knows how the risk he's taking by investing into a startup.
Yes, that's the idea. Interestingly enough, many legislations mainly build on a definition that relates to the wealth or the annual income of such investors. But there are other factors that are taken into consideration, such as professional experience in a financial sector, or with private equity, etc. And even if you go through the accreditation platform, on our platform on Investiere, you would have to answer questions on all of those.
So it's actually a self-declaration in some sort?
Correct.
Okay. If you look at the Jobs Act, you talked about the US regulation. It's not really relevant currently for Switzerland, but may be relevant in this way that it might come in the future. The Jobs Act is actually the public fundraising for startup companies. There is the Title III, which actually would enable crowd investing specifically, but this Title III is not enacted yet. And I don't think it will be enacted in 2015. Do you see also maybe a regulatory problem in Switzerland for this to be done to non-qualified investors? I mean, it's not your business model, but I mean, this is the view how to get startups up and running with 50 Swiss francs.
I mean, I'm also not an expert on the US regulation, but I follow it from a personal interest point of view. And you're right, it seems that they have gone quite far in making crowd investing possible. One step was to be able to address a general public instead of just a dedicated number of investors, but still then only allowing qualified investors to actually do the investment, which is a funny mix actually. And now, as you said, the idea is obviously also to set certain boundaries for non-qualified investments actually. And I don't know how far they went, but with respect to Switzerland or even Europe, I think we could look at Germany that recently launched a new regulation. I don't know if it's yet in effect, but the cornerstones are now set. And there the idea is clearly to make certain limitations, and within those limitations you're able to invest. And those limitations are usually a certain investment volume per startup, so it should not be possible for, let's say, fundings of 2 to 10 million, but rather below 2. I don't know the exact number for Germany. And sometimes there's also limitations in terms of number of investors per deal, etc., etc. That's the kind of the rough direction where the regulation, I think, is going.
Mm-hmm. So coming back to Switzerland, if I am a startup and I'm looking for investors and I think about crowd investing, first of all, what kind of investment sum could I get out of crowd investing, and must I be scared from having 100 investors on my board, which actually would scare me a little bit?
Yeah. Well, in our case, the contribution we can make to a financing round is on average 500,000 Swiss francs. That is usually a tranche out of a bigger financing round with other co-investors. And the average ticket per investor and startup is close to 30,000 Swiss francs, 28,000 I think was the last calculation. And that already shows that we are not targeting hundreds of small ticket investors, but rather smart business angels that actually want an investment that is entrepreneurially motivated and also gives a certain minimum ownership. Must you be afraid of managing hundreds of different investors? There are ways to pool this tranche of business angels. One way of doing is using the typical shareholders agreement that's in place anyway, and have a mixture of an obligation to have a representative representing these investors at general meetings, for example, and also a binding of votes, so the representative can vote 100% either in favor or against any issue that is debated.
Now that's a round to get me financed. Now from the crowd, I think I can get everything. So there are other crowdfunding sites where you can sell your product. How would this cooperate or totally go against crowd investing?
Well, if you're referring to the Kickstarters and Indiegogos out there, I don't think at all that this is going against crowd investing, as this is, I think, very complementary. You can use, for example, crowdfunding sites such as Kickstarter and Indiegogo to test your market, like throw your video out to a really large crowd of potential consumers, and then show that there's enough people who would want that product. And it's also a nice way to get pre-orders for your product, even if you don't have one. So you could do that without yet having all the production in place to actually ship out your products. And it's a nice way to solve the working capital problem as well in the beginning, because you don't need to pre-finance, let's say, if you produce this hardware and not knowing if you're going to sell it. So there's tons of advantages of actually doing such a campaign. It depends a little bit on the product also. Obviously, it makes more sense for B2C type of services or products that address a wide potential audience. And then, if this is successful, you have also the marketing effect of having such a big crowd of ambassadors that actually talk about your product. Then you're in the best situation to then go to business angels and crowd investing platforms and raise capital there, as those angels usually want to see a certain traction and market demand before they would actually become active. So I think this is one step to go to crowdfunding, collect the interest and demand, give out some perks, and then go to the business angels and get a significant portion of funding.
How do you think, if you compare traditional seed rounds, angel funding to via crowd investing, what would you suggest a startup should do? What would be easier?
Well, first of all, I don't think that this is contradictory to actually address various sources of capital. In fact, that's also the rule for our investments that we make. We do co-investments with various angel clubs, such as BAS or Start Angels in Switzerland. So usually we're looking at similar, there's a certain overlap in deal flow, obviously. And in all those places, you might be able to find not just money, but also smartness and investors that have relevant network and know-how and open doors for you later, apart from just giving you the money. However, I mean, as a founder of a crowd investing platform, I have to also argue in favor of what we do. I think the main difference is that, first of all, you address a wider and more heterogeneous group of potential investors. And therefore, the chances of finding people with relevant know-how for specifically the business niche you're operating in is higher. And we have various examples that actually show that we are able to bring not just money, but also relevant networks and experience to these startups, which leads to a win-win for everyone, the entrepreneur, the lead investors, the co-investors. So that's one thing. I want specific knowledge, usually in the industry, people with 10 years plus experience in those markets that I want to exit my company to or sell my products to. So that's really one thing. And crowd investing is a clever way using modern, technologies to actually be able to do that. And secondly, crowd investing platforms, not generally, but at least for us, I can say that because the spectrum is actually very wide, can also offer a more standardized professional service. Because usually with angel clubs, the quality, let's say, for example, of the due diligence and the lead investor varies a lot, because it depends who is going to take the lead for the deal that you're making. That's, again, nothing against traditional angel clubs. They're very, very professional members, but it depends on the member who takes the lead role in the deal you're making. When you go to a platform such as Investiere, you have a lead investor out of the investor group, but also Investiere as a professional workbench to these lead investors to make sure that there's a high level of quality in anything, in the process, how it is managed, in the diligence, in the contracts that are used, et cetera, et cetera. So I think that's the advantage of, let's say, a professional service such as a crowd investing platform or a non-for-profit service as a business angel club.
If we compare it to the crowdfunding, I know I'm coming back to the Kickstarters and Indiegogos in this world. If I have a product, I made my pitching video, I put it online. Normally, they have so many projects going online. There are thousands, 10,000 of projects going online a day. Actually, I cannot get funded unless I bring my whole crowd with me. Is this the same for the crowd investing?
It depends on the crowd investing platform. Here, I think it is very important for an entrepreneur to understand that there's the spectrum of platforms that operate highly professional, meaning that the quality both on the startup side, but also the quality expectation on the investor side are very high. Because the idea is you want to allocate the capital only to the very best companies out there, and also with or from sources of capital that are not only bringing money but also smartness to the table. And then there's another spectrum of crowd investing companies, and the internet allows that business model too, which provides you hundreds of companies and very little pre-selection and pre-due diligence before you go online and make an investment decision. And there you have, obviously, instead of just 10 deals a year or 20, whatever, that's the range we are right now with Investiere, you have hundreds. And then it's obviously more difficult to orient yourself about what the quality level is of these companies. I guess that's the first answer to it.
I think what you're saying, at least what I understood, is that on one side you have the large platforms which sell gadgets in short term,
yes,
and on the other side you have the crowd investing platforms which are actually investing into startups, but there are not 10,000 of startups in Switzerland. Anyway, there are not 10,000 of startups.
Thanks for reminding me about this aspect of your first question. Well, exactly. When you go to, let's say, a crowdfunding platform such as Kickstarter, Indiegogo, you need to do a lot of preparation in a sense of bringing in a certain network effect already, in order to be successful. I think that's what you had in mind.
Exactly.
If you just upload your video and click start without having thought about who are going to be those that generate a first buzz around it, that's probably not a smart idea. That's not necessary if you go to a highly selective crowd investing platform, because the levels to actually be launched and be presented on the platform is so high that you will end up being part of a dozen startups a year anyway that all generate a lot of attention with the registered members of the platform. But then again, there are also those crowd investing platforms. For example, in Germany, there's some very, or in the UK, some very successful ones that present hundreds of deals, and then you kind of have a similar challenge like Indiegogo or Kickstarter.
I'm sorry, I compare it always to Indiegogo and Kickstarter, even though that Kickstarter and Indiegogo is very diligent in selecting their projects and making the project public. There are still some fraud going on, and typically somebody who doesn't even want to build a product, but just makes a cool impression about the product that people invest, and finally it goes out. How is this fraud detected, or in crowd investing? How do you go about that?
I think you cannot 100% avoid fraud if you only base your selection or approval on automated or online approaches. That's also why we at Investiere decided to follow a more hybrid model, where we do what works well with social signals and the internet, but also have lots of processes that are still very manual. And one of the things is, when it comes to selecting investment proposals or deals, that we have various meetings over and over with these teams, the entrepreneurs who are at the center of any due diligence anyway, if you're in early stage investment. And even then, there's no guarantee that you might not end up funding a fraudulent business. But at least you have done more than just looking at paper and KO criteria, and you have to do your best to understand where the real motivation comes from when talking to these entrepreneurs. So far, it went well for us, but it's just a matter of time until we also see fraudulent financings through crowd investing. That's for sure.
But at least then you're on the same level as anybody else doing either seed rounds or
exactly.
Or VC rounds.
Then it's a human thing that can happen in any angel club or anywhere out there. Yeah.
And the fraud is, in this case, is not platform related.
No, it's in this case it would not be platform related. No.
Yeah.
Perhaps it's easier also to obtain money for fraudulent purposes if you choose a platform that is fully online, all the process automated, etc. I can only assume that.
So, okay, I'm a startup, I'm looking for money. So how do I go? What is the process? I'm thinking about due diligence. Oh my God, this is weeks of contracts looking. What is the process to get into a crowd investing site?
Well, again, let me take Investiere as a example, as this is first-hand information on how we do it. The first step is, and I think that is an advantage of crowd investing using the internet and social media in general, is that the crowd investing platform, if it is professional, tries to find an expert in that subject or field that you as an entrepreneur are operating in. That's what we do. The first thing before we as an investment team look at your detailed business plan, etc., is to find someone with a couple of years experience in your field. And with a couple of thousand of not just investors, but also registered members with industry experience, C-levels or board members of even big companies that might be relevant, we have a first thumbs up, thumbs down type of assessment. And what we do is we identify them, we match the profiles of the registered users with the specificities of the deal, and then have a chat based on, let's say, an executive summary of a business plan with this industry expert. If this first hurdle is taken, only then we, as an investment team with our dedicated investment managers, look into, let's say, the business plans and meet with the entrepreneurs, discussing key questions about the business plan over and over. And if that is completed, we call this a curation process. The case is presented by one of our investment managers to an internal investment committee. That's very similar to what a VC usually does. And there a decision is taken whether or not we find this business investable from a pure business point of view. If that second hurdle is taken, the last step actually is, and there are a number of things run in parallel, that we run a legal and financial diligence, mainly with the idea to kind of see if all the things that the entrepreneur has promised are actually true. So we look at, let's say, the whole set of contracts, and follow also checklists there. And in parallel, there's also the preparation of the financing round in a sense that we need to first be able to convince investors online. That's the idea of crowd investing. Instead of presenting it offline like in a business angel club when you are invited to, let's say, a nice dinner and have the possibility to actually interact in reality with these people, your presence is online. So in parallel, we take your hopefully well-documented business plan and do a best-of selection and put that online. And also take a video, as we do. A bit shorter though, perhaps 1.5, 2 minutes, focusing not so much on the products or services that the startup delivers or wants to deliver, but on the people behind it. Because if you are online first, you need to make sure to build a connection to a potential investor. And then we launch you if everything is in place and all lights are still green. And then you could say that the final step, or the final step of the due diligence is actually once you are online, because it doesn't stop there. Investors are not just wiring the money, but there's a question and answer room, a deal room online, where every investor that's interested can not publicly, but within those other, within the group of other interested investors, can ask questions. And the entrepreneur answers them online. The advantage for you as an entrepreneur is, instead of going from one business angel club to the next one, answering the same questions all over again, it's just a one-time effort, it's online, and you can also not hide behind certain answers, because you cannot give one answer to X and another to Y. So this is a very important last step of the diligence process that also conveys the confidence to co-investors to actually invest, because they see this live due diligence happening, and that's very trust-building.
I think transparency is the most important key point in this, that everything is transparent from start to the end for the entrepreneurs, for the investors, and of course you providing the platform.
Absolutely. And I think in 2010, when we started this platform business, we didn't know if it was actually possible to make people invest their hard-earned money, significant amounts, via an online platform. And until now, by the way, still a large portion of our investors never even make use of offline meetings that we also offer. So let's say roughly 50% of investors do invest just, let's say, virtually. That's something we found out that this is the case. However, if you do this, then trust and transparency, or transparency as a basis for trust, is the most important thing. You cannot afford to have any concerns out there with respect to how you operate, the data that you give, the information. I think that was key to the success of where we went over the years. I absolutely agree.
So over the years you had a lot of experience. Let's come to the good and the bad. So if you could elaborate one of the good experiences you had and one of the not so good experiences in the field of crowd investing.
Well, for the good experience, let's take a recent closing of a financing round that we've done for an ÖPFL, so ETH Lausanne spin-off, called Atolite. Atolite is operating in the field of building measurement instruments for quality checks in the semiconductor industry. And we actually did 2 financing rounds for them. So this was already the second. In both, we were able to not just provide or contribute money to their financing needs, but also to find very relevant investors. And to be very concrete, in this last financing round, we were able to win Steffen Wagner as an investor, who ultimately also took a board seat in the company. And he is one of the rare species of investors who operate transatlantically. So He has an investment firm that is based both on the East Coast in the US and also in Switzerland. And for a spin-off, a high-tech spin-off such as Asolite, I think that's very relevant to be able to enter and get access to the semiconductor market in the US or even globally. And Steffen Wagner also happened to work many years in the semiconductor industry, having all these connections and can open doors. So that's a good example of how crowd investing in a positive way can lead not only to, as I said, to money, but really relevant know-how networks. And there we're very proud of. And that's just one case out of various others that I could mention that really prove the viability of the approach. Mm-hmm. And the bad one you want as well.
The bad one we can learn something from.
A bad one we can learn something from. I mean, I can give an example of a company that was liquidated, which was this time an ETH Zurich spin-off called Nanocean. At the time, a very promising business that still had certain technology risks involved that were also communicated very transparently, but unfortunately they turned out to be not just risks but actually reality. And the technology, which was about determining or characterizing nanoparticles in liquids, did not work the way they expected it to. Now, obviously, you could say this is not a bad experience because this is part of venture investing, right? It's risk capital, and obviously, in actually most cases, your investments will fail. But I think it's a good example we can learn from, because if crowd investing is done right and professionally, and that is actually, you could say, mainly up to three different things. First, it must be real equity, as we discussed before, because only with equity or mezzanine forms that turn into equity, you are sure that you have in information rights and voting rights for the case that things go bad. Secondly, the deal must be structured in a way that is really specific to the startup. In this case, we had a milestone-based financing strategy and contracts, knowing that since there was certain technology risk involved, we would not, grant all the money right up front, but have some parked once the milestone is reached. And in that case, as I said in the beginning, this first milestone couldn't be reached, which was the reason why a significant portion of the money at least could be handed back to the investors. And thirdly, you need to have, as we mentioned previously, we need to have smart investors, good investors with industry knowledge. And luckily here, the lead investor was able to early enough find out that something is not working as planned, and then take swift action, knowing what he was doing, because rather act fast and with a bad end than the other way around. So as a result, we had a liquidated company, but everyone involved, all the co-investors that participated in this crowd investing campaign, were actually quite happy with the way it worked. And it's nice to see that even if you fail, you can fail in a very professional way and without bad feelings. But then you will have to have real investors that are close enough and that are educated and experienced enough to solve the problem professionally.
Thank you for this insight. Now, for this, I give you back a wish, an open wish. If you would wish, who could stay in your spot the next time or some other time and answering questions, who would that be?
Well, what about Schneider-Ammann, and ask him why not incentivize business angels like the UK does, with an interesting tax scheme, or someone from FINMA to discuss regulations as we did before, or someone from the corporate side, because it seems that more and more corporates are looking into innovating together with startups instead of just trying themselves. And there's a couple of interesting companies that actually do that, and people who provide services there as well, of course.
Perfect. Well, Steffen, thank you very much for this deep insight into the crowd investing focus. Thanks a lot.
Pleasure. Thanks for having me.
This was Mindcast, the Swiss startup podcast. You find more information and other episodes under www.mindcast.tv.